Over the weekend, the United States and Israel launched strikes on Iran that eliminated much of the country's top political and military leadership. Well, we don't know how this conflict will unfold in the coming days and weeks, and we're not here to opine on the political considerations of the operation. We are optimistic about the longer-term implications. The Iranian government, under the now deceased Ayatollah Khamenei and weakened Islamic Revolutionary Guard Corps, was unequivocally a source of regional and global instability. If the end result is that we've diminished Iran's capacity to project instability onto the world stage, that's ultimately beneficial for the global economy and markets. Take, for instance, energy. Yes, we may experience short-term disruptions with shipping through the Strait of Hormuz, and there is a risk that Iran attacks energy infrastructure in neighboring countries like Saudi Arabia. But destroying Iran's military apparatus and accomplishing de facto regime change, or at least regime alteration into a less outwardly belligerent leadership, should eventually reduce the geopolitical premium in oil prices, thus stimulating the global economy. Presumably, Iran's ability to create instability in the Middle East via its proxies, or on Europe's eastern front via the provisions of munitions to Russia, will also be weakened, if not entirely finished. Again, less instability longer term is a positive. Iran is a country rich in history, resources, and human capital. If this operation unlocks Iran's potential, the world will benefit, none more so than the people of Iran. One last prediction. We don't think this has the prospect of turning into the next Iraq, a long and drawn-out conflict with ambiguously defined aims. For better or worse, the Trump administration does not appear interested in nation building, and to reiterate, Iran, unlike Iraq, has a much richer national identity and history. This seems like a narrowly defined mission to institute, by force, new political leadership that's more responsive to U.S. priorities. To be sure, one can argue against this type of power exercise. But as we used to say in my law firm days when working to the point of exhaustion, it is what it is. The initial market reaction to Iran news over-indexed to short-term market risks, but it's quickly accounted for what we think is the more likely longer-term constructive outcome. As of midday on Monday, U.S. equity markets are slightly higher, having risen over 1.25% from this morning's open. We think this is the right read, as, at least to us, it's easier to imagine more going right in the long term than going wrong. And if things do go wrong, it's hard to believe the result is worse than the previously existing status quo. Commodities markets, especially energy, are repricing higher, but are well off last night's highs when crude oil traded to $83 per barrel versus the current price of $77. Gold, while up $18 per ounce, is also down from its overnight highs above $5,400. We're generally constructive on energy assets given rising global power needs and the current pricing environment, which is profitable for oil and gas operators. But we don't think buying energy simply because of the military operation in Iran makes sense. If anything, we might end up with slightly more oil making its way out of Iran in the coming years if sanctions are relaxed and the country can attract new infrastructure investment. As for interest rates, the initial knee-jerk reaction was a bid on U.S. bonds, sending the 10-year Treasury under 4% for the first time in months. That move has unwound, though, and the 10-year rate now sits at 4.06%. We think the events in Iran are marginally positive for longer-term inflation trends, assuming the country can regain access to global energy markets. Since reaching a peak of 5% in October of 23, the 10-year Treasury has been on a slow march downwards, and we don't think the military actions in Iran will have a material impact on this trend. By now, you may have gathered that we don't think there's much in terms of actionable investment suggestions based on the developments in Iran. That, of course, may change, and we certainly believe a successful operation can improve the long-term global risk environment. But for now, the key market story remains artificial intelligence and its impact on capital investment, the employment landscape, and industries that either stand to benefit or face new competitive pressures. Hopefully, we have more reasons to discuss that during our next correspondence. Thank you, and have a great week.